Well, continuing coverage now. If you split bills with a roommate or go out to dinner with friends, you may opt for using apps like PayPal or Venmo to send and receive money from others. But you may have to claim these funds on your taxes. Ryan Hermanet spoke with a local tax expert about this and has more details on what form you'll want to look out for.
As you sort through your mail this tax season, finding W-2s and other important documents, you may come across a new form called a 1099-K. Now, this accounts for your transactions throughout the year on third-party payment apps like Venmo and Cash App. And over the next few years, more and more folks will be expected to include it with their returns.
So I can see a lot of people getting caught up with getting 1099-Ks as we go forward.
The 1099-K is a tax form that details the income you receive from third-party payment apps. And while it's mainly intended for taxing business and private seller transactions, folks who use these apps for everyday money sharing between friends and family may receive one. However, there's a way to claim it as a personal expense so it doesn't get taxed.
And you'll report the income, and then there's another line deeper down on that Schedule 1 where you'll report it as a personal transaction, essentially a subtraction, so money in and money out, so it'll net to zero.
When this form was first introduced by the IRS back in 2023, you had to have received $20,000 through one of these apps to receive the form. However, over the next few years, the threshold is lowering. Now, just to put this into perspective for you, for the 2024 filing season, the one that we're in right now, the threshold to receive a 1099-K form is $5,000. You would have had to have received that amount through one of these payment apps throughout the year. Now, this is mostly applicable to small businesses or folks who use these apps for larger expenses like sharing rent costs. If we look to 2025, that threshold drops $2,500. 2026 is where it gets interesting. The threshold will become $600. So many folks who use these apps for smaller expenses, like sharing dinner costs or smaller utility bills, will be expected to include it with their tax returns. Dave adds, if you do have to claim your personal transactions, keep a paper trail to back each transaction up.
Make sure you keep receipts and proof. Just because you put it on your tax return as a personal transaction doesn't mean the IRS doesn't come back and ask you for proof that it is indeed a personal transaction.
And if there's one piece of advice that Dave has for folks who receive this form in the mail, definitely don't ignore it. Now, if this form comes to you after you've submitted your return, Dave says that you must amend your taxes and then resubmit them to the IRS. For now, reporting in Rochester, Ryan Hermanet, News 8.